Confession. I have totally been that person the night before taxes were due, sorting through receipts, trying to get my QuickBooks up to date. So I know from experience that if you don't make time to regularly review your finances, it inevitably gets pushed to the back burner. We're busy, and this is the thing that gets pushed aside. So this is probably the number one thing that I get asked to share, other than like how I pay myself, which I'll share in another video. How do I keep up with my finances month to month? So my money workflow in this video. When Kyle and I first started working together in finance, we would meet up on Friday mornings just to talk about sales goals, how our week went, to hold each other accountable. So when we started dating, we started lovingly referring to these Friday breakfasts as our money dates. So since 2009, we have been getting together and talking about money once a month. We've looked at personal finances, business finance, marketing metrics, and it's been a staple in our household. And now I've taught this money date philosophy to hundreds of my students. So whether you call it money dates, finance Fridays, duty days, whatever title you come up with for yourself, it's important that you sit down at least once a month and review the numbers in your business and in your home finances. Today I'm going to share the 10 steps that I do in my business every single month. And also there's a few things that I do throughout the month which I'll talk about as well. But 10 steps is my money workflow for my business. Okay, so step number one is kind of a simple one. I use Asana for task management. So step number one is just to duplicate my workflow task in Asana and assign it to the next month. This way I don't forget, it's always on the calendar, and I don't have to repeat the process. I already have my workflow worked out in Asana. So I actually created a printable that you can print below. You'll see it in the comment section, and you can print this checklist out yourself, and you can either just print it off, or if you use a software like Asana, create a task in Asana that you can just duplicate. Albert Einstein says, don't memorize anything that you can look up, and I take that to heart. So I'm a big believer in creating a workflow once, writing it down, that's key, and then repeating it each time you do this. So I do it once a month, and in Asana I have a general project called General To-Dos and Tasks, and then I have a separate section called Bookkeeping, and then I just create my monthly money workflow as a task, and it has these 10 steps as subtasks, and then I can just repeat it every single month. Step number two is to categorize your spending for the month. So this is also called expenses in the accounting world, but where did all of your dollars go for the month? I have 3 accounts for my business. I have a business checking account, our business credit card, and then a tax savings account. So I want to look at all the spending in each one of those and just categorize it. So I use QuickBooks Online for my accounting software. You can use any kind of software that works for you. People ask me all the time, what do you like for accounting software? I use QuickBooks Online, but I say find one that works for you and how your brain works. My key point here is that you want to have some kind of software that pulls in the transactions automatically from your bank account. You don't want to have to manually enter any income or any expenses. So I like QuickBooks Online because it does it automatically. So if you are still doing this in a spreadsheet, that's totally fine. Excel or Google Sheets will work great. I highly recommend once you get above 25 to 50 transactions a month, I really would encourage you to get a software. The reason why, if you're doing it manually, it's too easy to miss something. And so I like a software that automatically pulls it in. If you have a bookkeeper, of course, this is their job and they will be doing this for you. So I categorize all my spending based on the money plan that I set up at the beginning of the year. So I have categories that I set up at the beginning of the year, and I look at all those and categorize my expenses accordingly. So examples like office supplies, or is that labor, product development, all of those different categories, and then I just put my spending into those different categories. A key point here, I always say, is you want to make your categories specific enough that they are meaningful, but not so detailed that it gets really cumbersome. So for example, you want a category for office supplies, but probably not paper clips. So you just want to come up with categories that are meaningful to you. What do you want to see in your business? Do you want to know how much you spent on software? That's a category that I have because I want to know, we have a lot of online products, how much I'm spending on software each year. So we have a software category. But I don't really care how much I'm spending on office supplies specifically, so I just bulk it all together. Hopefully that helps. So step number 2 is categorize that spending. Step number 3 is we want to input all income. This is also called revenue or sales. So again, if you have a bookkeeper, they're going to be doing this for you. So income comes in different ways. We have one-on-one clients, and they used to pay via check, but now everything we do through QuickBooks Online. So I invoice them through QuickBooks Online, and then QuickBooks Online has a payment processor so they can just pay directly online, which is super helpful. So That's one way we get paid. The other way we get paid is through our online curriculum, and I use Stripe for my payment processor. So for anything that has an invoice, like a client, during this step, I want to apply any payments a client has made via check or via QuickBooks Online if they've paid that way, to decrease the balance of their invoice. So that's step number one, is just input those payments. If you get paid by check, I used mobile deposit, and that was super helpful, or you want to make sure you add a step here to go to the bank and deposit those checks. So then I also have Stripe as my payment processor. So a lot of you have online shops and you have a payment processor as well. So however those transactions are coming in. So this is the most tedious part of the process because Stripe pulls in payments in big chunks, and I like to see my income based on my revenue streams. So my primary revenue streams are the Blueprint Model, Blueprint at Home, which is my personal finance course, my Blueprint Year, which is the planner. Then we have some shop sales, affiliate sales, those type of things. So I like to see my product sales broken down by the type of product. So with Stripe, since it comes in big chunks, I have to go through every transaction and actually input it for the product. It's super tedious, and I'm hoping to find a better process there, but that's what I'm doing. You could also just bulk this all as online sales, but if you're in the Blueprint Model, if you're one of my students, you know that I like to see income broken down by products and revenue streams. The reason why, this helps me know where to direct my time and attention and which products are the most profitable. I call this a profitability audit. So if you can, try to break down your income by your revenue streams and the products you sell. If you have an online shop or if you're a brick and mortar store, you might just do this as general sales. You don't want to break it down by 50 different products, but I only have really 5 revenue streams: one-on-one clients, the Blueprint Model, Blueprint at Home, my Blueprint Year, and then affiliate sales or other online sales. So hopefully that helps, but you want to categorize that income hopefully by your revenue streams. Step number 4 is to send invoices and payment reminders. So I invoice my clients on the first of the month or when I do my money dates. This way, I'm just doing this once. I'm sending out all invoices for projects due or that are happening that month. So let me give you an example for a wedding planner. So I've had clients in the past that will take like a 50% retainer at the time of booking and then the remaining 50% balance 2 weeks before the event. And I really encourage you to change your language a bit there and just let your client know that you'll bill them the first of the month that their wedding or event or project is happening. That way you're not trying to remember to invoice and collect payment 2 weeks before when you're probably working on another event. So just a little tweak there to make your life a little bit easier. That's the whole goal of this money day, is try to do all of your money tasks in one day. And that just makes your life so much easier. So collect those payments, send those client invoice reminders. I also have a workflow for declined payments for students of my online courses. So this is what I look at this time, any payments that have been declined, and we initiate the trying to receive those payments of workflow there. Hey, we need a new credit card, update your payment information, those type of things. So step 5 is to pay any bills that are due. So I don't really get a lot of physical bills anymore, but I get more of those for our personal finances, which I'll do a whole personal money workflow as well in another video. But any bills that you've received, go ahead and pay those now. We have a lot of contractors that we work with, so I try to set those up on automatic payments, but I also have those invoices coming in that I pay at this time. Also, I do have a virtual assistant. At the time of recording this video, I have one virtual assistant, and she is paid hourly, and she sends me an invoice every 2 weeks. So that is something that I have to do throughout the month that doesn't land always on my money date. So I do set up her payment every 2 weeks based on her hours. I have had employees in the past, 5 actually at a time on payroll, plus all of our contractors. And so all that was automated through a payroll system. But right now, if you have any bills, anything outstanding, pull those up, go ahead and pay those. Also, a little tip here, when I paid quarterly estimates, which I'll talk about in a little bit, for taxes, I made a note to pay these during the pay the bill section. So those aren't due every single month, but 4 times a year, pay those quarterly estimates. I pay those from my tax savings account, but I pay that now while in step number 5. Step number 6 is to pay yourself. So this is the fun part. So we actually, at this point in the business, have it set up that our salary is paid on the first of the month consistently every single month. We also do quarterly bonuses, which happen on the first day of the quarter. So January, April. This is bad. I can't do it in my head. You get the point. So a salary every month and then a quarterly bonus. We do this automatically. Our company is actually licensed to get technical here as an LLC. So we just transfer the money from our business checking account over to our personal checking account. We aren't actually paid via payroll. So it's just a transfer, and then it shows up in QuickBooks as an owner's draw. So it's on the balance sheet, not the profit and loss statement. So I know that's a little technical, but if you aren't sure yet how to pay yourself or how licensing your business works for taxes, I would recommend talking to a CPA for this. So we're licensed as an LLC, but we're treated as an S Corp. So our CPA goes in at the end of every year and does a one-time payroll entry to pay our taxes for the year. So as I mentioned, we have a tax savings account, and that's how our taxes are paid at the end of the year based on how much profit the company has made. I always recommend, just side note, saving 30% of your profit or how much you've paid yourself for taxes. So that's how we pay ourselves each month. Okay, steps number 7 is to reconcile your accounts. So if you think back to the good old days of balancing a checkbook, that's what reconciling your accounts is. It's just a way of double checking your work. So you want to make sure all the entries that you've put into your accounting system or into your spreadsheet, if you're DIYing it, match all the transactions on your bank statement. So I have a big iMac computer, and I just pull them up side by side, my QuickBooks Online and my bank statement, and just go through each line item to make sure it matches. Technically, your CPA cannot file your taxes based on your accounting software until the accounts are actually reconciled. That just ensures that your profit and loss statement is accurate and there's no double entries or anything missed. Okay, so step 8 and 9 are my favorite steps of the whole day, because now we're getting out of the tedious tasks into the strategic tasks. So if you have a bookkeeper that does this for you, they've done a lot of this along the way. They've entered those expenses, entered that income, and reconciled your accounts. But if you're doing it yourself, I do all my bookkeeping myself, you have to do those tasks on your money day. But from here on, it gets really fun. So step number 8, not 9, 8 is to look at your cash flow plan. I love a cash flow plan. So what you do is you look at your beginning balance in your bank account, all the income that you expect to receive for the month, whether that's one-on-one client work, final payments from clients, or any kind of online sales, shop sales, brick and mortar sales. How much do you expect to pay for the month, as income, and then how much do you expect to pay and spend in expenses? So this is important that you know kind of general overhead expenses each month, or any big things that you have coming out for that month. Then you look at what is the ending balance and ask yourself, do I have enough? It's just a cash flow plan. This is what makes me feel secure that I have enough to always pay myself, pay my staff, pay our expenses. If you don't have enough, it gives you a goal. We need to sell something. We need to book another client. It's a great way just to know, do I have enough this month? That's a cash flow plan. Step number 8. Step number 9, and we're almost done. So this is where we compare our spending and income, our actual profit and loss statement, to the money plan that we've created at the beginning of the year. And if you aren't sure how to create a money plan, I would love to help you. This is something that I love doing every year with my students in the Blueprint model. A money plan is just your financial plan for the year. How many sales do you need to make? What's that sales goal? How is that broken down in revenue streams? So how are you going to make that sales goal? And where's all your money going to be spent? How much you're going to pay yourself? So it's just a breakdown and a financial plan for the year. So a money plan is an estimate, whereas your profit and loss is actual. So it's really important. I teach my students this all the time. We want to make the plan and then work the plan. So you have to go back and look at our actual income and our actual spending and compare that to our money plan. We don't want to create that money plan once and then never look at it again, stick it in a drawer and be like, oh, how'd I do for the year? What we want to do is look at that every single month. So I love this step in the process. It reminds me of, what's my sales goal? How am I tracking towards that? Have I booked enough clients? How did my launches go? Do I need to book some more? Are we on track? Can I slow down a little bit? So it just keeps me going, set some financial goals towards my sales goals. So review sales. How are you tracking towards your goal? And then we have to review spending. This is a key point. We don't want to get to the end of the year and say, wow, I really overspent in those areas. Looking at this every single month will keep us on track and inside those spending parameters. So how much are we spending on software? How much are we spending on labor? Is anything going over budget here? Do we need to adjust that budget? Remember, money plan is just an estimate, but it is kind of a system that we want to follow for the year. It's a goal. But we want to make sure we're reviewing it to actual income expenses. So that's step number 9. Compare your profit and loss to your money plan. Step number 10, last but not least, we want to scan, file, or shred any paperwork. So this is just one of those cleanup tasks that keeps your office nice and tidy and everything ready and prepped for taxes. So first and foremost, we want to scan in any paperwork into our accounting software. So I love QuickBooks Online because I can just attach receipts, attach any statements, attach any bills, and attach invoices, all those kind of things right in QuickBooks Online so that I don't have to keep the paper copy. Because yes, technically, if you don't have a digital copy, you need to keep a physical copy of those receipts. So that's something I do every single month. Just go ahead and scan it, file it. And then I also have a file in my office for any paperwork that I need to keep for taxes, anything like that that we'll need for the end of the year. I file that in my office. And then any paperwork that we don't need to keep, just shred it and keep your office clean. So there you have it, my 10-step money workflow for my business that I do every single month. I highly encourage you to set a date on your calendar. I do it the first Friday of the month, unless there's a holiday or something. Really set a date on your calendar and look at your finances, because if you don't, inevitably it gets pushed to the back burner and you're coming tax time feeling stressed. The other great thing is, as a business owner, Marcus Lemonis says, if you don't know your numbers, you don't know your business. Knowing these numbers helps me to review those sales goals, make sure I can pay myself, and to know, do I have enough? What is enough? And just keeps me on track year to year. So I hope this has been helpful. Leave me a comment in the section below. Just let us know if this has helped you. Make sure to print off the checklist, and we'll see you in the next video.